Shoppers in Windsor, and all of, I know Shoppers is a big one of your tenants, but they just decided to go dark because it's a university town. They don't have the business the 4 months when sort of, the students are not there. And, this is Windsor. This isn't, isn't Toronto. So my sense is it's better to invest in something which is much smaller and be sort of in center ice than to go on the outskirts. I think it's risky. I mean, I look at sort of around, our firm has been involved in a lot of recreational properties, waterfront recreational in Georgian Bay and Muskoka. This stuff has not traded for the last 2 years. Investors who are buying at the Ritz don't need a condo on, don't need a cottage on Lake Rosso. They could care less about that. So that kind of market, my sense would be, it'd be safer to buy a small retail investment. I think secondary or tertiary markets are risky, and I kind of agree with what Garnet is saying. It's better to be safe than sorry, and I would go to where the big play is, and the big play is 416. And outside of that, who knows? I think it's very, very risky.
If I could just add one thing in terms of, again, being a real estate investor. If you look at some of the best properties, whether it's office or retail, they're really owned by a lot of large, good operators who's been around for a very, very long time. And whether it's Brookfield or RioCan or ourselves or Dundee, who accumulates office buildings around the country, you don't get the type of management synergies, access to tenant, access to capital when you invest on your own in real estate. And I really think that if you looked at the last 10 years, our industry has delivered anywhere between 15 to 20% return at a 50% average leverage for the high quality companies, the investment grade rated companies. I don't expect we're going to repeat this over the next 10 years, so we've delivered almost 20. If you ask me 10 years ago what was the prospect of return in First Capital, I'll probably tell you 10 to 12% return. I think if we didn't see double-digit return over time in real estate, we're not a pension fund, we'd probably sell the company to a pension fund most likely. I think for a small investor, there's only one problem investing in public companies, that you don't pay the 4% commission. But if you absolutely insist, we'll take it. So we can change the system and sell you stock with a 4% commission. But I think it's a wonderful way to invest in real estate, assuming you have a good broker that knows management, that knows the track record of the company, that can analyze the numbers, that you're ready to read research. I'm not sure a small investor in one property has the same advantages as some of the large players. And again, you gotta watch who you invest with. I'm not saying that anybody who's a public company is worthy of investment, but overall in the last 20 years, the quality of the public companies in real estate and the REITs has changed dramatically.
My question is, I've been reading on a couple of journals, and I've found the disparity between New York condos and Toronto condos in terms of condo size. So New York condo size, the journal mentioned that is probably twice the size of the Toronto condo, which is the average is 700 square feet, and we've been seeing growing proliferation of 500 and under square feet. How has that impacted the, I know it's been great for sales, but how has that been affecting the appreciation of the price and the pushing factor of the bubble, of a potential bubble?
Condo sizes are getting smaller, and the reason they get smaller is there's an affordability issue, which is a price issue, a total price issue. When we do our condos, we try to have at least half of them that will sell under $400,000. At $400,000, we hit a barrier. Up to that point, we're paying sales tax basically on it. And once it goes beyond $400,000, we pay a full 13% HST, which makes affordability an issue. So the condo sizes, our average condo, I would think on our last 3 projects, is about 665 square feet. We have sold condominiums at just a little over 350 square feet. We put a Murphy bed in and we make them as habitable as possible, but basically you're getting a hotel room with a small kitchen and good recreational facilities and so on, and you do a lot of living outside your home if you've got a 350 square foot condominium. But we're addressing the affordability issue by doing that. Our experience with resale value is that the 2-bedroom units that you would have, which would be 700 square feet, 750 square feet, they have the better investment value because they're much more livable and you attract a much broader audience with those. Perhaps it's marginal, but that tends to be the result. And they're more saleable down the road as well, which is a bit of an anomaly. I'm not quite sure I understand why that is, but if you want to make an investment in a condominium, the 2-bedroom unit is the best one to invest in. It attracts more people, a broader audience.
So would you say that buying 2 units next to each other long term, with the ability to expand them, would be a better investment than buying 1 small unit?
Then to buy, sorry?
Would you say that it is a better investment to buy 2 units next to each other as opposed to 2 units in separate building, just for the opportunity?
Oh, it's absolutely better. Yes, if you were going to, if you had the wherewithal to buy 2 units,
Side by side.
you're going to be able to rent the small unit for say $2 a square foot. That's pretty much the market. You're going to be able to rent the bigger one for $2.50 a square foot. That's why it makes it a better investment value. But somebody might want both of them, so get 2 small units. You can join them up, make sure you know how the demising walls are located and so on. But if you can get 2 units, it's a far better idea, of course.
Okay, that's the last question. And just before we hand it over to Will, we're going to have 2 bars open, but before we open the bars, we actually have to empty out of the atrium so that we can have movers come in and clear out the chairs. We won't have to do this in our beautiful new event space and open next year, but for now, this is what we have to do. So over to you, Will, for closing remarks.
Okay, thanks everybody for coming. I know I learned a huge amount from these 3. I hope everybody else did also, but thanks to you and thanks to our great guests.